Hello everyone. It's becoming more and more likely, in my opinion, that the ECB will keep its policy unchanged at next week's meeting. Yesterday, the European Union Commission lowered their inflation forecast, cutting the forecast for this year to 1% from 1.4% previously, and for next year to 1.3% from 1.5%. The new forecasts are pretty much in line with the private sector consensus, which is 1% for this year and 1.4% for next year. The consensus for 2016 is 1.8%. Now, while that's still below the ECB's 2% target, it's well above the current rate, meaning they expect inflation to move back up towards the target rather than falling into deflation. This would corroborate recent statements by ECB members. We've had 3 ECB council members speak in the last day or two, and they all said basically the same thing. We're in a low-price environment, but certainly not in deflation. So, unless the ECB's economists have a distinctly different view of the world than everybody else, it's unlikely that they'll come up with a scenario next week that would require the ECB to loosen further. Meanwhile, the U.S. indicators out yesterday were, generally speaking, worse than expected, but that's quite usual. Yet, despite all this, Eurodollar is still trading within its recent range. Since February 13th, it's been basically between 1.3650 and 1.3750, more or less. The high was actually 137.73. This suggests to me that the fact that they can't break out suggests to me that the market's looking for new themes to establish a new trading range. My assumption is that this new theme will come when the weather in the U.S. warms up and U.S. indicators become more reliable. Then, assuming that they start improving, we should get a dollar rally. Gold continues to rise. Apparently it's benefiting from Bitcoin's problems as money flows out of that into gold. As for today, there's very little worth noting on the schedule. The main event during the European day will be the second estimate of the UK GDP for the fourth quarter. Given that we're halfway through the first quarter, I don't think that's going to send too many pulses racing. In Germany, the GfK consumer confidence for March is expected to be unchanged. Sweden's got retail sales for January and the minutes from the Riksbank's latest monetary policy meeting. And in the U.S., new home sales are forecast to have fallen 3.4% month-on-month in January. That's down, but it's still a slower rate of decrease than the 7% month-on-month fall in December. That could be considered an improvement. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, Global Head of FX Strategy at IronFX Global, wishing you solid trading.